Okay, so Bitcoin hitting $1 million. It's a pretty wild thought, right? I mean, even if you're into crypto, that's a big one. We're diving into an article that lays out the case for this. And honestly, they make some really compelling points, especially about how the big players, the institutions, are getting involved.
Yeah, it's this idea of institutional floodgates that the article keeps mentioning. It's not just individuals dabbling anymore. We're talking BlackRock, huge asset management firms getting into Bitcoin ETFs.
Okay, hold on, back up for a second. For anyone listening who's like, wait, what are ETFs again? Can you break that down for us?
Sure, an ETF or exchange-traded fund is basically a basket of assets, like a pre-selected mix of stocks, but designed to track something specific, in this case, Bitcoin. For institutions managing massive amounts of money, a Bitcoin ETF is way easier than buying and holding the cryptocurrency itself.
So BlackRock jumping into Bitcoin ETFs is a big deal then, right? The article said their ETF raked in something like $180 million in a single day.
Yeah, that's huge.
Yeah.
To put it in perspective, that's more than many companies see in a year. And this is just one ETF from one institution. BlackRock getting in suggests they see long-term potential. And when a giant like that makes a move, others pay attention.
It's like Bitcoin is suddenly the hottest stock on Wall Street. But the article goes deeper than just money moving around. They make a pretty interesting comparison between Bitcoin and gold. What do you think about that?
It's an interesting parallel for sure. Both Bitcoin and gold hinge on the idea of scarcity. One of Bitcoin's big appeals is its limited supply, 21 million coins ever. That finite nature is similar to gold, which has always been a limited resource.
Okay, but I'm sure some people are thinking what I am. Gold actually gets used for stuff. Jewelry, electronics, even those chocolate coins you get around the holidays. What can you actually do with Bitcoin besides, hope it goes up?
That's the heart of the debate around Bitcoin's value. It started as a daily transaction currency, but it's shifting. Now it's increasingly seen as a store of value, much like gold. Think of it this way. Gold has industrial uses, right? But its price is driven by its safe haven status, a hedge against inflation, not just its practical uses.
So the article is saying Bitcoin is like digital gold, something you hold on to believing it will keep or increase in value over time. But it's not just about being digital gold, is it? The article dives into Bitcoin as a technology, talking about the blockchain. And honestly, that can be a bit confusing for people.
It sounds more complicated than it is. Imagine a giant public ledger everyone can see. It records every Bitcoin transaction ever made. That ledger is the blockchain. But instead of one entity controlling it like a bank, it's distributed across a huge network of computers worldwide.
So instead of your bank, it's this global digital accounting system. But how does that tie into Bitcoin potentially hitting $1 million?
That's where it gets really interesting, this decentralized, transparent nature of the blockchain. It's a major part of what makes Bitcoin so potentially disruptive. It offers security and immutability that traditional finance just can't match. And that's attractive to both individuals and those big institutions we talked about.
So we've got this tech side, the institutional interest. But what about governments? The article seemed kind of torn on their role. You've got El Salvador going all in on Bitcoin, making it legal tender. But then the U.S. seems more cautious, even putting pressure on banks involved with crypto.
Yeah, it's tricky because governments aren't all on the same page.
Right. It's not like they have a single crypto policy.
Exactly. Their stances on Bitcoin are always changing. As the tech develops, as they figure out what it all means. El Salvador is a fascinating case study, though. Making Bitcoin legal tender was a bold move. It's like a real-world experiment in Bitcoin's potential as an actual currency.
And the article talked about El Salvador buying up Bitcoin too, right? Like adding it to their national reserves.
Yeah, it's one thing for individual investors to be bullish, but for a country to back it up with their treasury, that's a whole other level of conviction.
It's like saying we believe in this enough to bet our future on it.
In a way, yeah. It feeds into this idea of Bitcoin as a hedge against traditional financial systems. The article even quoted Max Keiser. He's a big Bitcoin advocate. And he thinks El Salvador's strategy could be huge for their economy.
Okay, speaking of Max Keiser, the article mentions him a lot regarding this $1 million prediction. For those who don't know, who is he and why does his opinion matter?
So Max Keiser is a really well-known voice in the crypto world. He's been a Bitcoin bull for years. Basically, he's super optimistic about it. His predictions are often seen as pretty out there. But he's gotten a lot of attention, especially within the crypto community.
So he's been right about Bitcoin before, but he's also known for being, well, let's just say, very enthusiastic.
Yeah, that's fair. He's definitely on the more extreme end of Bitcoin believers. It's important to remember that when you hear his predictions, They're coming from a very specific perspective.
So take it with a grain of salt.
Exactly.
Which brings us back to the U.S. and its more cautious approach. The article mentioned the Biden administration's efforts to regulate crypto, like looking closely at banks involved with crypto firms.
Right. The U.S. government seems to be focused on mitigating risks. Things like investor protection, preventing illegal activities. It's not necessarily about stopping innovation, more about creating rules so the crypto space grows responsibly.
So it's this balancing act between letting innovation happen, but also making sure things don't get out of control. And it's interesting how different countries are handling this. Some embracing Bitcoin, others more cautious. It's like a tug of war between innovation and regulation. And it's hard to say how it'll all play out.
Absolutely. There's a lot of uncertainty there. And that uncertainty is a key factor for Bitcoin's future.
Right, because if the U.S. or other big economies suddenly change their tune on crypto, that could have a huge impact on Bitcoin's price.
Exactly. It's a constantly moving target.
And it's important to say we're not giving investment advice here. We're just laying out the information from the article and giving you some extra context.
Right. We want you to be able to form your own opinion.
Informed decision-making, that's the goal.
Exactly. Because at the end of the day, the decision to invest in Bitcoin or any asset is a personal one.
Now the article goes beyond just the price of Bitcoin, right? It also talks about the underlying technology, the blockchain. We touched on it earlier, but maybe we could dive a little deeper.
Sure thing. The blockchain is really the foundation of Bitcoin. And understanding its potential is key to seeing the bigger picture. Think of it like this. It's a decentralized, unchangeable record of every Bitcoin transaction ever made. This distributed nature makes it extremely secure and transparent. You don't need intermediaries like banks.
So it's like cutting out the middleman.
In a way, yes.
And this ties into Bitcoin's price. How?
Well, the article argues that the blockchain's revolutionary nature, that's a major driver of Bitcoin's value. It's not just about how scarce Bitcoin is. It's about this technology's potential to change finance completely.
So even if you're not convinced about the million-dollar thing, understanding the blockchain is still important?
Absolutely. It's already impacting various industries. And its influence is only going to grow. It really makes you think about where things are headed, like we're seeing the start of something big. But it's hard to say exactly what shape it'll take.
Right. It's like standing on the edge of something completely new. Exciting, but also a little unnerving.
But
okay, we've talked a lot about the reasons for Bitcoin hitting $1 million. What about the other side? What could hold it back?
well, for one thing, Bitcoin is notoriously volatile. It's known for its price swings, those big ups and downs. That can be exciting for some investors. But it can also scare away people who don't like taking risks.
It's definitely not for the faint of heart.
Exactly. And then there's the uncertainty around regulation. We've talked about how government policies can impact Bitcoin's price. If major economies crack down on crypto or even ban it outright, that could really hurt Bitcoin's chances.
And we can't forget about the competition. Bitcoin was the first big cryptocurrency, but there are tons of others now.
Right. And some of them were designed to be better than Bitcoin in certain ways, like
Yeah.
faster transactions, lower fees, that kind of thing.
So Bitcoin isn't guaranteed to stay on top forever?
Exactly. It's a constant race.
It's like the Wild West of finance out there.
In a way, yeah.
So to sum up, we've got these potential rewards, this $1 million possibility, but also some big risks and challenges.
And a lot of unknowns.
Exactly, which I think highlights why this is such a fascinating topic. It's not just about the money. It's about how we think about finance technology, the future.
It's about challenging the way things have always been done.
And whether or not Bitcoin hits $1 million, this whole conversation is pushing us to rethink things.
It's forcing us to adapt and evolve.
And I think that's a good thing, even if it gets a little bumpy along the way.
Definitely keeps things interesting.
That's for sure. Well said. Thanks for diving into this with me.
Anytime. It's been a great conversation.
And to everyone listening, thanks for joining us on this deep dive. Until next time.